terms of Q&A, I'll just go to Darwin first on HighGold. HighGold, before, when the project was being run by, I guess, by Westman and some others, they were looking at direct shipping that ore. I mean, you've put out a new resource. What is the plan? Like, what is your ultimate goal for Johnson Tract or the area? What kind of volume do we need that could build infrastructure there? Because before they were not thinking about building much infrastructure and just shipping it out.
Yeah, that's a good question. I think for us, we're going to have to spend some time with the resource before we come up with an answer or some ideas on that. It's just hot off the press and we're just looking at it now. But really, we're almost obliged to get a resource out to establish what the starting point was. But our primary focus for the next 12, 24 months is grow this thing as fast as we can. We what we have now is the prototype. It basically defines, kind of like the perfect deposit in my mind of what you want to find. And our emphasis now, because it's in front of us, is to keep finding more. But certainly with the resource like this in hand, with the grades, the combination of the grades and widths and geometries and all of that, you could start thinking about it. But I don't have an answer for you right now.
So, I mean, just with respect to Energy Fuels and what's going on with the government support, I guess one question is, we're in an election year. Does that change if we get a Democrat as president, or do you feel this is enough bipartisan that it won't matter?
Well, the Nuclear Fuel Working Group report is a bipartisan report. We're in the appropriations process right now. And we're doing it in a bipartisan way. Make sure we got a balance of Republicans and Democrats. Look, whenever you have political change, there's always some risks that you cannot control. But we think that certainly the dependency of the United States on lots of critical materials, not just uranium or vanadium or rare earths, has really started to resonate with both political parties. So it's our goal to keep pushing that. Our company was the main leader, Energy Fuels, with the U.S. government. We started off with Section 232 petition back about 2 years ago. They got morphed into Nuclear Fuel Working Group. And, we're pleased that after decades, the government has finally said uranium matters for lots of reasons.
Okay, so to Cal on Liberty Gold, I mean, with any kind of heap leach, it's volume, I guess, and what's the head grade, and then how many stages are crushed for what recovery. And so are you generating a lot of those catalysts to answer those questions this year?
Yeah, we're generating those catalysts. The average grade of a run-of-mine heap leach in the Great Basin, and that's the resource grade, is about 0.5 gram. And if you go look at SSR Mining in their last quarter, came out about a week ago, they produced just over 58,000 ounces of gold at a 0.3 gram average grade with a 3-to-1 strip ratio and a 73% recovery. And they produced those ounces underneath of $950 an ounce. So they can be extremely low grade deposits, but they're high margin, right? So when we're modeling something like Black Pine, as an example, we were the original finder of Long Canyon, which was sold to Newmont in 2011. At Long Canyon, there's 7 different heap leach pads. So when you're playing with the metallurgy and all these kind of things, you have to go out and fully analyze how to treat each piece of a deposit separately. And then you maximize the margins from them. So they don't have to be run-of-mine heap leach. Part of it could be, if it's got clay in it, it has to be agglomerated, etc. So it's a really art of doing metallurgy. And so effectively what we're doing is looking at every portion of the Black Pine discovery independently and each rock type and analyzing and running our metallurgy on it to maximize those recoveries in order to maximize the economics of the project by the time you get to an economic study. I'm not sure if that answers your question.
No. I mean, I guess the issue is for people when they look at grade, they might not understand what goes into that number. How much does it cost to mine, but how much does it cost to process versus something that's underground. So grade isn't the only issue. It's how much does it cost to actually get the gold out.
Yeah, because you could go drill a hole at a hole and hit 2 meters of an ounce. But if it costs you $1,800 an ounce to get that rock out of the ground, that's a high grade, low margin deposit. So
right.
If you go out and drill an oxide heap leach system in the Great Basin, you could have 200 million tons at half a gram, but if it costs you the same amount to move each ton of rock, you know what your margins are. So it's a low grade, high margin deposit. And so when people look at these companies, you have to understand between high grade, high margin is what you're looking for. Low grade, high margin is what you're looking for. And they're effectively, when we get into our part of this type of deposit, you have to recognize that. And I'm not sure that the investing public really fully understands that. They might buy and sell based on 2 meters of an ounce of gold somewhere. But the reality is, can you get that gold out of the ground? And what's it going to cost you per ounce to get it? And so margin's almost more important than grade, to answer your question.
Yes, absolutely. And to Teo, getting back to the copper market, Freeport was in there with your ground to the south, and now they've left, and there has been this issue about counterparty risk potentially with basically copper producers, and less so with diversified miners. So can you speak to that between your partnership, now with Vale and your former partnership with Freeport?
Sure, absolutely. Well, every group that we speak to, and certainly the diversified miners, the larger companies, when you speak to them and you talk about, what are their budgets and what are they looking for over the next 5 years, how secure are those budgets, the diversified miners definitely have more stable budgets. The groups like Freeport, First Quantum, perhaps even Lundin, you and I talked about Codelco. Those kind of groups are much more beholden to a specific commodity, and their budgets tend to be year to year. And so definitely, can you call it counterparty risk? I would say that you have to be very much understanding of what exactly your agreement gives you. If a partner can walk away at any time, then really understand what are their constraints. Because if one of their constraints is a weak commodity price and one commodity price dictating that, then obviously, you definitely have that risk. But if it's not about one commodity, Vale's very diversified. They've got a tremendously interesting risk profile. You've probably heard about their discovery in Indonesia, which looks like another Chukaru-Peki, 500 meters undercover. And I don't know if you were at our Tethian session at PDAC, but there is, I think, amongst the global miners, not ones that are focused regionally, but the global miners, they are prepared to go anywhere for really stellar assets. So they will take that exploration risk in jurisdictions that I think the average retail investor, would kind of raise their eyebrows at. That is really interesting, and that's a very different theme from what you hear in the capital markets about, jurisdiction quality trumping a lot of other things. The diversified miners, they're in it for the long game, and to them, asset value, grade, that's paramount, and oftentimes they will be prepared to take jurisdictional risk. So I don't know, that's kind of a little bit more of a macro answer.
Okay, sticking with copper with Patrick on Trilogy, I mean, the permits on the road are obviously, they're not being put forward by you, they're putting forward by the Alaska Development Fund. But I would say, besides the road, you've got all these other permits that you want to start doing based on the Arctic pre-feasibility study. Do you see any slowing of, permitting or processing with the COVID-19 pandemic on bureaucracy? And also the same question that I asked Mark about the elections, is that going to delay any of the process for you, going forward?
No, we don't expect the permitting for the mine to be impacted. Like let me put it this way, it hasn't impacted the permitting for the road because a lot of the work is just simply desktop work. All the baseline work for the mine is pretty much complete. All the metallurgy, geotechnical, all that work has been done. So we don't think the COVID-19 situation will affect the permitting of Arctic. In terms of a federal election, yeah, I'll expand on that. The good news is because we're on state and private land, we only need one federal permit, and that's the 404 wetlands permit, and that's issued by the Army Corps of Engineers, and all the other permits be issued by the state. And because of that, the Army Corps of Engineers would be the lead agency in the permitting process. And for those who are not aware of this, the Army Corps of Engineers is part of the U.S. military. And so instead of dealing with a political appointee, we're dealing with generals and colonels. And the U.S. military tends to be much more apolitical than these other agencies, such as the Bureau of Land Management or the Forestry Service. The other thing I would point out is we have a partnership with NANA, and when you have a powerful partnership with a native corporation, that also helps you politically as well. And also mention that the governor of Alaska is adamant that he wants this project to happen. He's from the borough. His 3 daughters worked at the Red Dog mine, and he's seen the economic benefits that the Red Dog mine has done for the region over the last 30 years. So no, I'm not too worried. If we were on federal land, yeah, I would have some concerns, but in this case, I don't.
Okay. For back to Mark on energy fuels, with respect to you're sitting on an inventory of uranium that could you could sell into the market, or that strategic stockpile coming up. But in the long term, this 35 whatever price, spot price, really is not an incentive for most producers to produce in this market. What do you think takes uranium to the next level and the power plants start signing long-term contracts again?
Yeah. Well, look, yeah, we do have, well, by the end of this year, we hope to have around 700,000 pounds of inventory, which you do the math, at 30 or 40 or 50, $60 a pound, that can equate to an awful lot of working capital. We also have about 1.7 million pounds of vanadium. But yeah, no, the price at even 34 is not high enough to produce newly produced uranium. It's not high enough for Cameco or Canada. But it's really a dilemma that we're in here with the uranium business, because it's really a battle between the state-owned enterprises, mainly Russia, Kazakhstan, Uzbekistan, and the Western world. I mean, Cameco needs north of $50 per pound. The Western world needs north of $50 a pound. And frankly, a lot of the state-owned enterprises need north of $50 a pound because they're not economic, but they keep pumping out the product. So look, we think that, the government's saying that, do not go, we're not going to let the uranium miners, the conversion, first 2 steps of the process in the United States to go out of business. So they put in this nuclear fuel stockpile. They also have the provision to add what they call the American Assured Resource of fuel loads, which is in addition to the nuclear stockpile. But we do think that it's becoming apparent that supply disruptions can put the uranium prices back into the ranges of where they can start to become economic again for even the Western producers.
Okay. And Mark, we're going to come back to you at the end of the Q&A so you can finish your presentation and get it up.
Okay, thank you.
No worries. And Mundoro, getting back to Teo on Mundoro, with Freeport, they spent $3.2 million on that, on that southern grounds. And they did a lot of geophysics and they drilled a lot of holes. But from what I gathered from the press release, there was one target that seemed to be a high priority target, Mark of Common, that never got drill tested. Did you know why that was?
Because we didn't have the drilling permit in time. It's funny. It's the original program last year. I mean, they came in really a pretty big budget in the beginning. We tested a number of targets. We realized that geophysics was really needed in order to refine the testing. We did geophysics at the onset of this field season. We got that done in time for most of the follow-on drilling. And this one target, Mark of Common, we put in the applications last September. And just unfortunately, this time around, it took a long time. It took 6 months. We literally got it on Monday. So bad timing for Freeport. But yeah, it was one of the better targets. It had one of the best grades. There was a really interesting hydrothermal breccia that looked quite wide. We couldn't figure out the true width of it. We needed to go back in and test it from a different angle, and never got a chance to do it. And that's the opportunity. It's just a really, really remarkably large system. You know, anyone who's in the exploration business, when you've got 16 kilometers and you need to focus in on where you're going to start drilling, it's an iterative process. So they missed out on that one.
Okay, going to you're going forward is now you're looking for a new partner for that project and also Zeleznik in the north?
Yeah, that's right. And we've got a data room already up and running. And like I said, we've already gotten interest. We've got CA signed. So it's I'm pretty confident that there's still a lot of interest in the district. There's a lot of interest in that specific portfolio. And it's just, you know, making it happen. So that's what we're working on. That's our job, to get another partner in.
Okay. Back to Cal, your project's in Idaho, but you know, there's a lot of people working in Idaho, and I gather there's a lot of interest from majors in Idaho, and you've been obviously signing a lot of CAs with them. When they look at a project like yours and they're booking reserves at $1,200 and $1,250, do they apply that kind of gold price to the economics for your project?
Under CA, anybody who's in the oxide gold business, all they need is a few points. They can figure out a resource on their own internally because they would have access to the database. They need to see metallurgy. And once you give them metallurgy, then they can run it through, and it's a boilerplate system with regards to an oxide heap leach mine, because they've been operating in the Great Basin since the mid-50s. But there's very few of them left because most of them have been mined out, and now they're mining sulfides that need to be roasted. So I think what's relevant under a CA, depending on the company you're talking to, is how many ounces do they project that they can mine on an annual basis. And they fully recognize that mine life is almost more important than the ounces of production, because they can walk their way through. If you had a 15 or 20-year mine life, any of the presenters who are presenting today, it's all relevant. What's the mine life? Because these are all good companies. And so in 2017, the average mine life of producing gold mine in the world with a public corporation was 12.7 years. The mine life for a producing 75,000 ounce producer or above currently stands at 10.4 years. So without any exploration, there's no mine life. So if you're a producing mining company and you've got a mine that has to shut down with a 5-year mining life, well, that mine might be for sale, and you're seeing those asset sales in the market. So there's two things you have to deliver: potential for mine life, and how many ounces do you think you can move, and you have to build that resource, and what's the margin on those rocks, and what's the geopolitical location where you're operating from. So under a CA, they all look at things differently, and but it's a reoccurring theme whenever I talk to these people. It's all about mine life, to be able to go through 2 or 3 gold cycles in the case of Liberty Gold. So it's almost more important than the ounces of production, because they know they're going to go through different cycles, but they have to look at their own production schedule to find out if they've got a mine that's closing, how do I replace those production ounces, but also extend the mine life at the same time.
Okay. And Darwin, with respect to your project, you know, you've got a project in Ontario as well that you started and then you shut down because of COVID-19. So how do you see that faring, the money that you raised to drill those projects in Ontario?
Yeah, I mean, we will be back there. We're we shut it down right exactly about the midpoint of what we planned to drill. So at about 2,500 meters of a planned 5,000, we were able to do that in an orderly way, which worked well. That means, and really actually we did that under budget because the logistics are so easy out there. You can start and stop pretty easily without it costing you too much. So our intent is to get back out there. We're gearing up to get out to Alaska. We may get back to Johnson or to Timmins drilling this summer, but it might make more sense to digest the data from this first round of drilling, do some more map work, surface work, and then return in the late fall and winter and allow us to keep more continuous news flow going. But shouldn't be long before we have the results out from the first round of drilling here.
Okay, just a follow-up. So when do you think you'll be ready to confirm that you'll have a field season in Alaska?
Well, we're pretty much there. I mean, I think everything right now has a caveat on it, of course, of what what can change pretty quickly with COVID. We did defer our start time by about a month. We were originally planning to get out there at the beginning of June. We're now pushing that off to July. We're pretty confident we can execute. We've been talking to all our contractors. We've got a fairly isolated camp that doesn't go in and out of remote communities. We can go get there straight from Anchorage and back. So we haven't publicly disclosed the scale of that yet, but it's going to be a pretty meaningful program with a couple of drills turning beginning of July and be able to get at that pretty aggressively. And a lot of room still, even with a month deferral. We're pretty productive up there, and we can, if we're having some success, we can really get after it right up into late October.